Okay, we've been watching the NASDAQ. Coming into the session, we released our market outlook. And at that time in the NASDAQ, our models were forecasting a 335 point range for the session, which is significantly above the 5-day moving average of 273 points, but it's slightly beneath the 20-day moving average of 392 points. And then our liquidity models were forecasting slightly over 418,000 lots would be traded on today, which is, again, that's also above the 5-day moving average, but it's slightly below the 20-day moving average of roughly 450,000 lots. But then right now we're trading, I think the range, we've moved over 500 points in the NASDAQ, and we're at roughly 320,000 lots traded thus far, going into midday. So we've just had this steady sell-off in the NASDAQ, just a steady decline. But what's useful, coming into the session, we could already see that the NASDAQ, when we compare it to the S&P, we compare it to the Dow, we compare it to the Russell, it was the one indice that we did notice had more opportunity, a greater likelihood of opportunity, simply because early on our models were forecasting that the range of the session, again, bear in mind, the range represent how much opportunity is in a given market at any given time. The NASDAQ was the only index in which our models in our market outlook forecast report that we release every day at 10:40 Eastern time. It was the only indice where our models were forecasting a significant deviation between the range potential of the session compared to the average range over the past five days, as well as the past 20 days. At this point, again, we're continuing to monitor the NASDAQ. Again, we see this major sell-off, and we can see where the different spikes of volatility occurred, as well as liquidity. Again, these spikes, what these represent is that our models read order flow in real time. They're constantly updating in real time to make a forecast at the beginning of each bar. And when something significant changes, we can clearly see this by this deviation in the color, these large spikes here. So at this point, given that we've already moved 500 points, we know we were forecasting 335, maybe now is the time to start looking to trade more conservatively. Again, we don't know how far this market could continue to fall, but we've moved significantly beyond what we were forecasting. So now maybe it's a time to start trading a little more conservatively.